Welcome to The Derivative by RCM Alternatives. Send it. Hello there. You found The Derivative, brought to you by RCM Alternatives, where we just put up a new white paper called A Crude Awakening. So go check that out. Given all that's going on, we look at why oil prices are such a big deal, everything from jet fuel to juice boxes, what the recession odds and inflation numbers look like if we have extended $100 oil, $150 oil, $200 oil. So go check that out at rcmalts.com/whitepapers, rcmalts.com/whitepapers. On to this pod. That oil paper is a handy go along with today's guest. We've got Brent Belote, who's been on the pod a few times before. He's kind of my resident oil go-to guest. He also makes me jealous every time I talk to him since he lives in Jackson Hole and gets to ski all the time. That's for another pod. It was last week, actually. But we're not talking skiing this week. We're talking oil, Iran, straits, islands, pipelines, boats, and all the rest, as we see just what this world looks like through the eyes of an energy trader. Send it. All right, everybody. We're here with my resident oil guy, Brent Belote. Brent, how are you?
Doing great. How about yourself?
I'm great. You're starting to climb the ranks of like top derivative guests. I think this is your third time, maybe fourth time.
I think it's my third. And it's usually, I think the only time we talk is, I think we talked during COVID the first time, Russia, Ukraine the next time. So it's every 2 or 3 years when we have an oil spike or an oil crash, one of the two.
Yeah, we'll put that one because that was fun. When oil went negative, we hopped on and talked because what? How does oil go negative? Yeah, so obviously wanted to get you on. A lot going on in the world of energy markets. We're not going to talk performance on here, but you've got a smile on your face from last month.
Yep. We had a big month, which was all we can ask for.
And I noticed the monthly update came out really quick. It was like before 10 a.m. on the good month.
It's funny how that works out. Right?
Yeah, it's always like the bad quarters. We'll get that next week. I'm out of town.
Yeah, take extra time writing the careful ones and make it go. So, yeah, it's been very interesting times in the oil market to say the least. So,
before we get into all that good stuff, we're both skiers. You made the wiser choice to move to Jackson Hole. I'm sitting here in Chicago without any mountains, but a really bad snow year in the Rockies.
Really bad snow year, but it was still good. You know, my kids are young enough where it's still fun no matter what we're doing. So it's a win-win either way.
Nice. You came on the heels. Last pod was with Joel Gratz of Open Snow, the founder.
Okay.
You know, the app where you track the snow totals. So he was saying it's just a fluke, that this is just reversion to the mean and we were due for one of these. And temperatures are rising, but precipitation's been steady. So you're getting more rain on the shoulder seasons, but generally it was the same precipitation.
I was looking at the overall snow totals, and like for where we are, the snow totals were actually right on par. And even on the higher elevations of the Tetons, it was above last year, the last couple of years. But it was one of those years where it would snow 2 feet, and then the next day it'd be 50 and raining. And then all the snow would be gone, and then it was just a constant snow and melt cycle. So,
well, let's hope he's right, so I can come back and visit you one day. Your kids doing like flips and stuff yet, or they're still young enough?
They're pretty crazy skiers at this point. I think the kids put in 40 or 50 days this year, so they're definitely on their way. But that's also why we live here.
I love it. So take us back. The war, what was it, a Friday night? What was the start?
Yeah, it was right at the end of February, and it kind of started off the month with a bang. You know, the Israel-Iran conflict with us and everyone, it really shocked the system. And it's funny because every oil person knows about the Straits of Hormuz, but that's probably the most mainstream this has ever been in the world. So obviously, at Cayler Capital, and even before this at JP Morgan, we were tracking a lot of ships. We're looking at where they're loading, where they're going, what the choke points are. And the Straits of Hormuz were always the most, critical choke point of oil in the world. So it was always something that we were aware of and something that we were monitoring daily. And to be honest, I didn't think, we had not a similar war start, but kind of last summer, we fired a bunch of missiles into Iran, and I thought oil would be 150 at that point, and it kind of sorted itself out in 10 days, and we ended up back to it. This one really is a little bit different in the number one, it was obviously still ongoing, but looks to be like there's kind of an end in sight. But this one was interesting because it more had a lot of ramifications that I think will have a lot of investing implications towards the future, from fertilizer to plastics to kind of feedstocks. You're really seeing it across all the commodity space here. So, I think it's something that was very interesting. And you saw that right away when we spiked to $119 in Brent, and then we were back at 85 that same day. That was a painful
That was a
one.
crazy one.
I was like, did I miss that? And I was like, wait, it seems like it's still really bad. So didn't have any risk changes, didn't have anything, kind of wrote it up, wrote it down, and then it just was a constant grind. But
few things there. Take us through one. When you mentioned tracking the boats, just makes me think back, like even to 10 years ago, what would that look like versus today? There's like a app or right, the flight aware for boats.
So
you can see where all
boat
those
that
ships
needs
are.
to load it, usually has GPS tracking on it, so you can actually see it in Bloomberg or different third-party softwares. There's a great guy on Twitter. It's actually Tanker Trackers, and he kind of does what we do essentially, where we're looking at every boat, where it's loading, where it's parked, is it moving through the strait, and you can see really real time where it's going and how it's kind of funneling through the Straits of Hormuz. So it's a very, very powerful software from that perspective.
My dad and grandpa were in the Navy, and so they would take offense to calling it a boat, it's a ship. But I've noticed a lot of oil traders call it boats, right? Even Trump was like, hey, we got 6 boats of oil.
Yeah.
Like, actually, they're ships. Right?
Tankers is probably the right word.
But then if they're smuggling oil out of there, they turn the GPS off and all that.
Yeah.
So you don't know the black market or the off market.
Yeah, that's always been a weird one, is how much floating oil they have, which is on the market anytime. And what they actually do is they'll load it on a ship, and then they'll get off kind of into the dark area, and they'll transfer it. And then they'll be like, the ship's empty. And you're like, that's interesting. Funny how that works out.
That happen.
So yeah, I mean, it's an interesting thing. I would say about, most of the month I was fairly bullish. And about 10 days ago, I started to get a little bit more on the bear side of things. Not to say we still can't have some, fireworks to the upside, but I think about 10 days ago, I started sending emails to friends and kind of chatting with different industry people, saying it really felt like there was a shift globally. It started with, a lot of I think it was the EU. There was an EU referendum that came out, and they were discussing, and they were like condemning it. And then you started seeing it more in the news about, hey, maybe there's an off ramp here. And then you start seeing the taco trade word come out. And so it was interesting to kind of feel that dynamic. And when the EIA did their coordinated release of, I think it was 400 or 500 million barrels of oil, it really kind of brought to light the fact that we have a lot of oil in the world. I think it's more the products that are going to be a problem for the foreseeable future.
Mm-hmm.
You can solve a lot of problems with SPR releases, floating storage. Oil can get back out pretty quickly, but I feel like the damage that was done to, jet fuel, distillate, and gasoline markets is going to kind of trickle its way through the foundation for pretty much the whole summer, in my opinion.
And is that the same as in the rest of the commodity space? Like copper mines haven't been upgraded in dozens of years. Like, is the infrastructure just hasn't been upgraded? And
no, it's more just that there's been a lot of damage to it. So when we look at, it's hard because you can turn oil back on fairly quickly, but I think I saw something that the LNG facility is going to take 3 years to get back online. So there's all these ones where it just takes a long time. And, when you look at here in the United States, they have refinery outages, and they'll plan them months in advance because you got to mobilize a lot of engineers, a lot of stock, a lot of different things to keep it right. So it just takes a long time to get it organized and get it flowing through the system properly again.
And the LNG is interesting, right? If I pull up a chart of Henry Hub of U.S. natural gas, like it basically didn't move, right? Through this whole thing.
That's a bad proxy, first of all, but
right. But that's what you're saying. Like, that doesn't matter because in that side of the world, they need that nat gas to make these these products and plastics and things like that.
Absolutely. And when you
Yeah.
look at the United States, we're an exporter at this point just because how much pretty much every oil field drilled nowadays is predominantly there's so many light ends to it. There's a lot of natural gas to it. And it just ends up being like most of the shale plays that are now pretty prevalent in the United States have a huge natural gas component, which is going to put a cap on that no matter what. But if you look at UK nat gas prices, or, for example, even the jet fuel in the United States versus jet fuel over there, jet fuel in Europe was, I think it was over $200 a barrel at one point. So they've had a massive spike, way more than we had. But it's going to have, like I said, a long lasting effect because we can export a lot of our products. That's probably where they're going to head for the foreseeable future.
What does jet fuel run at typically?
Over like oil normally, or depends. I
Yeah,
mean,
yeah, per
usually it's
barrel.
changing
You
the
said
spread, and typically that spread can be anywhere from $25 to $30 over oil, the price of oil.
yeah,
So seeing it over there when it's almost double the price of oil was pretty wild.
super crazy. And then I want to go back. So you're out on a Friday night. Maybe you're sitting at home with all those kids, but whatever. It's Friday night. You're an oil trader. You're an energy trader, and you see the news. Like, what happens? You can't trade it.
You can't trade it. Yeah.
Right. So
Yeah.
it's like a weird, do you think they did that on purpose? Like, two questions. What goes through your mind? Are you like waiting for Sunday night of like, shit, I got to do
Absolutely.
something?
Sunday night, I'm sitting there at my terminal, trading screen open, ready to do something. Thank God I didn't, but because it was one of those things that opened up 10, then it opened up 17, and it just kept going higher. So it was interesting,
Yeah.
but
The
it's very
text
strange.
messages
You're
were
really not,
flying of
yeah,
like,
you're not really seeing where it's going, and how it's moving. So
and
yeah,
then, but that whole weekend is shot. You're like, or do you
pretty much.
manage it
Yeah.
well? Are you like
I mean,
able to,
he does that every time. If you look at this, pretty much every Friday, there was a news announcement that would have affected the markets on a Wednesday or Thursday.
yeah, and end of the month. It was a nice little, hey, if we're going to, someone said like, hey, if we're going to do this, let's do it over the weekend. Let people digest. Maybe the market won't
Trump
crash,
is
you know?
very, very cognizant of the price of stuff. He is
Yeah.
definitely watching
Of
markets. He is
investment
definitely
stuff.
100%. He is very aware of where it is and what that ramifications are.
Some might say because he's trading it. But
So
we'll
yeah,
we'll leave
it was
that for another
interesting. There was
podcast.
there was rumors on one big down day that the Fed ended up that Scott Bessent actually sold a bunch of oil as a hedge,
Yeah,
which I thought was interesting. I'm like, if he's trying to push the market down by selling a couple million barrels of oil, that's kind of fascinating.
the super fascinating. Like
Yeah.
we can't take this press. So take me through. So you're in that Sunday night opens. You had already seen this building up. You didn't know missiles were actually going to fly, but like, where were you at coming into the month, coming into this event?
We were fairly
And
constructive
then
anyways.
yeah,
Distillate market was strong. Gasoline was strong to start the month. We were long going into it. So it was a good Sunday open, and all of Monday was just, kind of staring at the screen, watching the P&L drip away
like
after that first one. But it was still a good day. It just wasn't the up 9% on one day type of event that we
yeah,
had. But then it just continually go. As this was going through, it was very apparent that there wasn't really an off ramp that was good for anyone at that point, and it just kept increasing the rhetoric and the missiles were flying on both fronts. And it was very clear that, Trump would come out and say, oh yeah, we're having talks. And then it'd be Iranian news source says, no, we're not. And so it just seemed a very hit or miss. And that's kind of where we're at right now. I mean, even as it is today was a great example, right? Like, you're hearing all these things as Trump in his speech says that the war could be over in 2 to 3 weeks. We will negotiate a ceasefire as soon as the strait is open. And then you see a headline from Iran that says, we will never open the strait. And so I think everyone's trying to think of no one really believes anyone at this point. So I don't think it's necessarily over. It definitely could go both ways, but the US has gone out of their way to not really damage infrastructure. If we took out Carg Island, it'd be a big problem, but they're also a large exporter of potash and other fertilizer products and pet chem products. So it would have a very, very severe, if we took out that entire island and the energy infrastructure, it would be less of an oil story and more of a almost putting us into a recession story just because of the feedstocks that are required to come out of there.
and those were an importer of in the U.S.
US, yeah, pretty much everywhere, Europe, all of them. And so
So
it's a
that's a
very global market.
secret hidden story in all this, right? Of like, there's oil sanctions on Iran, but not
Yep.
feedstocks, not
Exactly.
nitrogen.
Exactly.
Yeah.
So
That doesn't
yeah,
make the
it's
headlines.
interesting to see like what they decided to attack and what they didn't, and where they would kind of draw the line per se.
Yeah. Have you the whole time? Has this been a purely this much supply got taken out? Is it more math or art, or of like this is a conflict?
Both.
I need to
Yeah.
I need to think of how this is going to react, how the market's going to react, or look at how they're reacting.
Yeah, I mean that's what I'm saying. Like I think it's this has been a lot of psychology as well in terms of okay, it feels like sentiment has shifted. There's a lot more pressure on Trump to get a deal done. The American public is not as thrilled with this as they were, if they ever were. So I think a lot of people are still wary just from Iraq and the different Middle Eastern events we've been a part of. So I think people were a little less excited about this one as it continued to linger.
Yeah, and it
And I
seemed
was kind
like
of on the same boat. Like, I the first week I was leaning in the camp of this will end quick. And then the next 2 weeks were, oh God, this isn't going anywhere. And then the last week has been, yeah, I think this is kind of ending again. So I kind of went back and forth 2 or 3 times on this. But yeah,
and
it's a lot of math too, because you need to understand where oil can go. One of my old mentors used to always say, like, the price of oil is just a number, right? Like it can go to 300 and there'll be ramifications on supply demand of that, but it can go as high as it can go. And in a war event or when someone actually needs it, it's kind of like negative. People didn't think oil could go negative, but when you have too much of
there it
it,
went.
you put it,
Yeah,
kind of have to deal with it. So, there could have been a scenario where people got stuck holding on to barrels or holding shorts and they got stopped out and it goes to 300. So, you had to be really aware on the upside, but it was I've been trading volatility in this market since 2008, and this was the craziest I've ever seen. You had calls that were $75 out of the money and they were trading for like $4, which is insane. They should be like 12 cents. So
they
it
were
really expanded.
teenies that became dollars. Yeah,
Exactly. It really expanded the whole vol curve. You saw everything kind of do it. But it also gave a lot of opportunities in that, like when there's different things that are expensive versus cheap, and you can kind of play it on a couple different sides.
and then talk like if this had happened, pick a number, 15 years ago. Are we the spike is worse? The spike is higher. Like one, U.S. wasn't as energy independent, probably, and
Definitely.
maybe you could.
Yeah.
Right. So,
Yeah.
like, tell me about that. Of like, what was part of the, and you can't get in the War Department's brain, but was part of the math of like, hey, we're energy independent. This is the time to do this.
Yeah, there was 2 or 3 things that floated around in it. The US said they were considering a oil export ban, and you started to see the global price of oil even stretch farther away from where we were. But that turned to they made an announcement like 24 hours later that was like, oh no, we're not going to do that. But you could really suppress the United States versus the world for a good amount of time, especially on the oil front. But there's certain things where, like I said, we're the taker of a lot of stuff in this world. So if you want to really do an export ban on the price of oil, then it's going to have trickle down effects for what other countries are probably going to do on an export ban to us as well, which would be pretty painful.
Right. We
So
won't be able
yeah,
to ship anything or build anything here, but gas will stay at
yeah,
$3 a
yeah.
gallon.
You can drive wherever you want, but there's no chips to build cars. So it's a slippery slope, and I think that was why they did that.
When you were back on the trading desk at the bank and whatnot, was there always like, hey, was this the far right tail event of like or far left tail event in oil? Right. Of
Yeah,
like,
for sure. I
well,
mean, that's something that
yeah,
kind of stayed with me was we always run scenario analysis on the books. Like at JP Morgan, it was okay, if we wake up and oil is up $10, if oil is up $20, if oil is up $50, because it's not just oil in a lot of these portfolios. It's oil, it's the price of gasoline, it's the price of, the volatility that goes up. And you saw a really interesting thing occurrence here where on a big up move in oil, the vol actually expanded. Typically it contracts on an up move and it'll expand on a down move. So big down moves usually expand volatility increases. But on this one, it was like a double factor. So I'm sure a lot of books were caught off guard in that when they run it versus their portfolio. But it's always something that I took with me is, hey, shock your overall portfolio to see what it would do in an up 50 scenario, an up 100 scenario, to make sure that you're not in a technically blow up risk or you can properly risk manage it.
up $100. So there
Yeah.
was always thinking like, hey, if that happens, boom. And what's the not to I'm making you put your like commander hat on a few times, but how do they actually close the strait? They can't, right? There's not a gate. They're just saying if you come through there, we're going to shoot missiles, and we've
Yeah,
got mines in there and
pretty
whatnot.
much. You can also mine it, which they have said they haven't done, but they said they wouldn't rule it out, and that can take weeks, months, depending on how good they do. It could be
Yeah.
closed for a long time. So
But it's like we're right there. It seems like we could prevent them from laying mines. Who
I'm not
knows?
a
Yeah.
military guy and I can't answer that, but it's really not a huge area that they have to hold or cause problems in.
Right. I think it's
And I
20
think,
miles across.
we've already seen what their drone capabilities are, and it would take, one drone to sink one of these. I mean, you
Yeah.
got
And
to
they
think
don't
about it.
have the
Got a
defense shields
got
and
a million
whatnot.
barrels of one of the more flammable liquids on Earth.
Yeah.
So pretty much one missile would sink it, and if you sunk two or three of those in the right spot, that's a massive cleanup to get those out of the way to be able to keep traffic moving through there.
And then and now it just comes down to the perception and the insurance, right? Like, cool, maybe the threat's not really there, but I'm going to charge you a shit ton of insurance
Yep.
to send that boat through there because I'm
Yep.
worried about this stuff.
Yeah, exactly. And I think, I mean, for me, the shoe to drop that I've been looking at is, are we going to attack any of their actual infrastructure in oil? And are we putting boots on the ground? Because boots on the ground is a pretty big escalation in terms of the United States, especially with Iran. And it wasn't something that, that was the oil to 150. That's a very, very, if we flatten Carg Island and we put boots on the ground, that's a big problem for the rest, because then there's no off ramp. Once you've destroyed, Carg Island is really their lifeblood in terms of revenue. And if you got rid of that, it'd be a very big problem for Iran to ever come back from for a long time.
Mm.
And that would be a serious, and if that happened, if we attack that, their first reaction is start attacking, there'd be missiles into Saudi oil fields, there'd be missiles into refiners, which is, like I said, those can take years to fix.
And then it's right, you get into quagmire territory of like, and now we need troops there to protect Carg Island as we rebuild it and yada, yada, yada.
Yeah, I think as this progressed, I think Trump saw that he's like, my two choices are to either hold Carg Island or destroy it or get boots on the ground in some way, shape, or form. But yeah, I had never really looked at it, but a topography map of Iran, it really is a fortress. It's like the whole country is mountains. It's actually pretty wide.
Afghanistan all
I had
over.
never looked at that before, and I spent a couple hours looking at that a couple weeks ago. It's interesting.
Well, then I'm going to make you put your geologist engineer hat on of like, what's with Carg Island? It's in the middle. It's so they don't have to come into the shore to load oil.
Yeah, exactly. So it's just pipelines that connect to it and they're able to export. So all these ships are obviously massive. They need huge drafts to be able to get in there and load up. And it just is one of their primary export facilities.
And then you mentioned Saudis. I read they have a pipeline system that bypasses the whole thing and goes the other way.
Not enough to materially change it. You still have a lot of exports through that strait.
And do you think this, like them in particular and others, will be like, all right, we need to start building?
I don't really know. I mean, I saw something.
Instead of paying Phil Mickelson $300 million, how about build a new pipeline?
Yeah, you say that, but I can't even imagine the cost. But yeah, if it's going to get ugly, then yeah, they probably will. But now I think it's a situation where Iran knows that. I think this may have emboldened Iran to the negative side. They know that they can hold this now. They know that they can impose a pain on the world pretty substantially via this. So, you're right. It might trickle down, but those pipelines will take a long time to build, talking years.
And Europe has no good, right? Okay, turn on the pipelines from Russia again. No, that's it.
Yeah, I mean, the real big winner in this entire thing is definitely Russia. I saw, we've already we waived, I think Trump waived a bunch of sanctions on Russian oil to try to get it in, to keep it down. So they have a lot of lever to try to keep the price of oil down and manageable, but none of them are really great.
So let's backtrack. If U.S. nat gas isn't a good marker, and was WTI even how are people hedging all this? Right?
Yeah, TI and Brent kind of were insulated. If you look at some of the other grades, Dubai specifically, oil was substantially higher. You were seeing it in the 160s, 150s range. So the rest of the world kind of decoupled from the actual physical barrel for a lot of these proxies.
Do you trade that like those other Middle East?
Not really. Yeah, I track them from a standpoint of a lot of times they're very important for where the arbitrages are and how you can move oil around the world. But no, I don't trade those, particularly just WTI and Brent are the two. And even
Yeah.
then you saw WTI Brent widen substantially, but nothing like you did the other grades.
And then are they even tradable, right? They've like tried to
They
make that a
are
thing, but
OTC. You got to trade OTC though, and
mm,
they're can be illiquid, especially in times like this.
yeah.
There's some rumors out there that some very large trade houses got caught on the wrong side on 2 or 3 of these. So I'm curious to see where the blood in the streets actually trickles out from. Because
I
I've heard
heard
of
those rumors
what,
here in Chicago. Was
what
it a
was that?
very large, was it a boat firm?
I don't know actually, but I
Yeah,
mean
I heard.
with how much things moved, it killed all risk systems. There was no risk system or risk people that could have prepared you for that, especially over there.
Which is back to your point though, but like why? Because it's a known thing. Like as soon as the US attacks Iran. But we were lulled to sleep with the past thing of the missiles went in and
Yeah.
S&P was up that day, I think, and I can't remember what
Well,
oil did,
I
but
did
yeah.
find it interesting because there was all these things, and when you're running through kind of the worst case scenario analysis in your mind, it's if the United if Iran ever shut down the Straits of Hormuz, we're $200 immediately.
Yeah.
No, we're not. Yeah, no, we're not.
Yeah. Right.
So it's interesting because that was
Right. We were 85 that night.
yeah, yeah,
That was
yeah.
the weird thing. People didn't think it was going to get shut down. They're like, "Oh, we got air superiority. Everything's happening like back to 85 because the
Yeah,
straits fine."
I kind of agreed. I didn't think it would be as big of a deal as it was for long, and it's again still going. But it can still get worse, if this is a prolonged thing, and people were really digging in their heels and saying, "Hey, we're gonna go in there, we're gonna do this," and they're battling and we're battling. Um, it's a tough one.
And then we mentioned the liquidity. Talk through what you were seeing in like these U.S. WTI Brent. Like, what was it? What was up on each side? How many millions could he get done?
I mean, still incredibly liquid in both of
Yeah,
those fronts. So no issues at all in any oil or U.S. product.
right. It wasn't trading like $5 at
No, I mean,
on the
it's
way
more
up.
just the speed at which it was. I've never seen that much. I haven't ran analysis. I should. But it was, there was times I'd wake up and, oil's down $1 and then I look at the high low in the chart and I'm like, oh my God, we were down 7. Like what?
Yeah,
Or even, even the other day, like I think it was Monday. Monday was up, $3, and then something came out, and it was down 3, and it was a $5 range before 9 a.m. And
you're
that
like,
kind
what?
of true ranges that you're seeing in the high lows is unheard of. $10, it's crazy.
And then, so what's that? You're looking at the options too. So the option vol went from like a 20 to a 40. What's that look like?
More. Yeah.
Yeah,
Yeah. And it was all call skew too. So it was all the calls were way, way more expensive. Yeah, just incredible. The way I like to think of it is to normalize it across, and you think of it in terms of a break-even rate, and that is essentially the amount that the delta of the underlying has to move in order to pay for the theta or cost of the option on a daily basis.
yeah.
Typically, oil break-evens are around $1.30 to $1.45. We were seeing them around $7 to $9. So that was
Mm.
saying that your theta, you're getting paid enough where oil has to move $7 to $9 the next day. Every day it has to move $7 to $9 in order to pay for your actual, like the cost of holding the option.
Ooh, it's
Yeah.
a lot.
But the problem
Yeah,
is, most risk systems, you can't, you can't hold short options. You just can't. Like in
yeah.
this
No,
market, you
yeah.
just can't do it. Like
Get a call.
yeah, you're getting a call from above and they're like, "Hey, you're short the 170 calls." And you're like, "Yeah, okay." Sold them for $8. And they're like, "Yeah, but if oil goes to 250, you're going to lose $80 million." And you're like, "Oh,
Yeah,
oh yeah. Okay. I guess they should give that, even though the trade probably was right. So there probably was some out people that got hammered on this. I think it was actually one of the, I don't know if you saw the PIMCO thing. They were down. I don't know what they finished the month on yet, but PIMCO is a historic vol seller. Their whole thesis is you're just constantly selling small vol every day across a number of commodities. and
Yeah.
you realize vol will come in below the basket. And this was the first time it's ever, they got really hurt on that. So,
Whoops.
yeah.
Selling vol and they got hurt? No way. Um,
In their defense,
so,
they're PIMCO, and they probably made billions and billions being shorter for the last decade, but
exactly. So let's talk moving forward. What are you looking at? What could be a couple different paths that wind this thing up? And or like, who cares about this? What's the rest of the world look like for?
I think if Iran opens Hormuz, it's done. If they come out and say we are committed to opening the Strait of Hormuz, and I was just got a Bloomberg alert. I was like, that'd be great if they did it on here.
Yeah.
And no, if they open the Straits of Hormuz, I think Trump will figure out a way to get a deal done. If they, he's really given them a very, very good off ramp right now, and it's a question of whether they'll take it. He basically said, "Hey, we will honor a ceasefire as soon as the straits open." It'd be very easy for them just to do that, but the problem is I don't believe they trust him, and they think he's just trying to buy time to do something else that's sneaky. I actually think he wants an off ramp. So, if that
Yeah.
happens, I think we can probably fall another $5 to $10. But I think I think we're structurally in a bull market at this point. I don't think we're going to end up in a scenario where we're back to $50 or $60 oil. I think we're going to be, north of 70 for the rest of the year. And the ongoing ramifications of that, again, I mentioned it, our distillate markets are still very undersupplied, and we're going to have a problem catching up to that. And gasoline, with summer driving season already kind of starting here in the United States, it's going to be hard to get a lot of the feedstocks necessary to blend a lot of gasoline and keep it going. So, I think we are in a bull market, even if that happens, if they did that. Now, again, the boots on the ground scenario, I think we'll probably see. I think the highs are in jeopardy at that point. At that point, if we put some troops on the ground, or we're involved in combat there, I think you'll probably see $150 oil. So right now it's fairly binary, which is why there's not a lot of great trades. It's time to get a little smaller, and everyone's roll farther out the curve, and just stay out of the front. Because right now it's all headline risk. So,
Are you do you get on Kalshi or any of those and look at the prediction markets, what they say about all this?
what's funny is this actually forced me to do a pretty deep dive on Polymarket, Kalshi, and there's actually one out there. I should get sponsored by them, Hyper Liquid, and they
Mm,
launched an oil perpetuals. So you can actually see what the price of oil is predicted to be on that time. And it's actually enough volume to where it's kind of a material benchmark. So, I think last weekend I was curious where we were going to open up oil, what this was going to look like. And I went on and kind of was playing around, looking at the correlations between this price and the price of WTI, how much it correlates to the Sunday opening. Is pretty actually good. It's pretty dead on for where we actually opened on Sunday night, in the Globex session, versus where the Saturday night Hyperliquid did. So it's very interesting. But yeah, it's definitely something that I haven't thought about as much, and I am thinking more about.
yeah. Well, it helps. And I've talked with a few hedge fund managers and whatnot who are like, yeah, as soon as it becomes more liquid, we'll get in there, right? You could, in this example, put on some $150 calls and sell the prediction that we won't have boots on the ground, or vice versa.
For sure, for sure.
Yeah.
Yeah, I mean, there's definitely the only
But they're
negative.
highly manipulatable, right? That's the
Yeah,
problem.
yeah, I would agree with that. Yeah,
Um,
yeah.
and
I
then
played
this,
around with it. I played around with it, looking at it, seeing how like they do like, will oil be above 150 on this day, right?
yeah,
And you can call that, it's actually an at expiry digital in the like option trading world, and you can actually
yeah,
replicate it with the WTI, with a WTI call spread or a Brent spread. So you can see actually, like, okay, here's what the actual market is pricing the probability as. Here's what Kalshi or Poly market as. Is there an arbitrage there to kind of do it? But you're tying up so much capital, and
yeah.
it was a tricky one. I
But
played
when
around
you saw that, you can see their spread basically.
pretty much. Yeah.
I'm sure
Yeah.
they're charging a healthy,
Yeah.
healthy spread. And then that tells me the CME, all the exchanges are going to adapt and be like, we have to offer 24-hour, like 7 days a week, right? People need to be able to trade on Friday night when this happens.
Yeah. Yeah, I mean, isn't that the whole point of tokenization and breaking everything
Exactly.
on
Yeah.
chain is it's yeah. To
I
be frank, there really isn't a reason why the Globex closes other than the fact that it was just, it used to be a pit.
Yeah. Someone's in there like, hey, we need a weekend still. Come on.
Yeah,
Yeah.
yeah, exactly.
Because it essentially doesn't close.
Yeah, that's what I'm saying. I don't know what the difference is between me waking up at 1 a.m. and trading versus Saturday at 10 a.m. There's pretty much the same thing.
Yeah, exactly. Cool. And then say this whole thing didn't exist, didn't happen. Where were you at with the overall energy markets? Where were you thinking you were still bullish?
I was still fairly constructive coming in the summer. I think it was an interesting market where distillate, again, still was kind of historically undersupplied and gasoline as well was looking strong. So
Talk to me.
where I had been
How does
wrong,
distillate get undersupplied?
where I was wrong was I was thinking that we would probably be in a structural oversupply of oil for the first, call it this summer. Balances looked very frothy and we looked like we were going to have too much oil this summer. So it really kind of took the wind out of the sails on that one and it flipped.
Yeah. But so explain that to me of how distillates can be undersupplied, right? Because if you have enough oil, you have enough to make the distillates, or it's all refining capacity
All refining capacity.
and choices, whether they choose to make diesel or jet
Yeah.
fuel.
Yeah, exactly. Exactly.
So what in the U.S. we're mainly making retail gasoline and diesel.
Yes. Yeah. I mean, yes, though that's pretty much the two primary products of all refiners. A lot of times what happens is you'll have, something happen globally. So Russia, Ukraine was a great example. Yeah, that was a big distillate disruption that we kind of took a year. It took almost about 18 months to get through. For us to catch back up with where we needed to be. And for this one, it just looked like we just didn't have enough coming out of winter. Granted, it was a very warm winter. It probably would have
Yeah.
changed my opinion with how low demand was. But looking at the forward balances and where we had refinery outages, and now what's happened is gasoline cracks and distillate cracks have gotten so expensive that a lot of these people defer their maintenance. So you have maintenance that would have been occurring this spring, and now people are just not going to do it because they're just making too much money. So you get like the Exxons, the Chevrons, the P66. They just deferred. They say, okay, yeah, we're going to take a refinery offline for 2 months, but then they're making too much money. So then they're like, yeah, we'll do it in the fall. So
And does that usually turn bad? Something breaks, something
no,
blows
no,
up,
I mean, it's just opportunistic. A lot of times they can run it hard out or run it stronger. So it's just a way for them to maximize.
you mentioned Russia. What's the Russia story?
Still sanctions, still a problem, but they
Yeah.
had to waive some oil. We waived, here it was, the United States waived some oil sanctions. So a lot of different places could buy Russia oil or Russia grade products. So yeah, they're doing everything they can to try to keep the price of oil down here in the States.
Russia is?
No, no, Trump particularly. Yeah.
Trump is. Got it.
Waiving different, and then he came out and said that he's going to, any Iranian oil that's already on the water can be sold to America. So, or it can kind of find a home. So those, all of a sudden, the black and gray area that we were talking about can now be, acquired. I thought that was interesting.
And that's probably a pretty loose,
Yeah.
already on the water.
Yeah.
Like, well, it
Yeah.
got on the water eventually.
Yeah.
And then, so walk through the rest of all the big players. China, what are they doing? Did they got a lot from Iran? So they are pivoting to
Yeah.
Russia?
Yeah. I think the biggest, the last couple months with the Venezuela stuff, with Iran, it's, in my opinion, it's fairly clear to me that this is more of a China proxy than anything. And that's how we decided to kind of attack them. Venezuela does a lot of heavy crude, which should be going to our Gulf Coast. And instead, it was always going to either China or India or kind of that way because of sanctions and how we had structured it. And same with Iranian barrels. Yes, we were sanctioning them, but they were still finding a home. They were able to get out. They were still able to get payments. And so just cutting off kind of the spigot for cheap China, cheap Indian oil has been a big one, I think. So I think this was more of a proxy to kind of cut off that before it gets before it keeps going.
Where does China go then?
They have to buy in the open market. I mean, it's a different world, right? Like they were able
Yeah.
to buy Venezuela oil at like 50% discount, Iranian oil at 50% discount. And you're basically able to run your entire country. If you could do that, your
Mm.
GDP takes up dramatically. You get a lot of tailwinds on free energy. It's a pretty good, pretty.
And you mentioned Venezuela. We did a pod or whenever that happened. It seems like 7 years ago. When was that? January.
Yeah, yeah, right.
um, it seems forever ago. But you mentioned like what? How soon could actual oil be coming out of there?
I
Like
think we're already
that
seeing
would
it.
make a difference.
I think we're already
But
seeing it. I think it was fairly quick turnaround. And now
mm,
I think there was I think it was Chevron or someone bought a cargo from there.
okay.
So
But I was like, it's super heavy.
yeah,
The
that's
guy
great.
in our post,
That's what we need, and which was the biggest problem is shale's great and all, but shale's a very light oil. It's very
mm,
gassy. A lot of the West Texas stuff and Permian, everything in the United States that we found is kind of not great for what we need, which is diesel fuel, which is jet fuel, which is bunker. And we also spent a lot of money on these really expensive refineries and upgrading our refinery complex to take these heavy sour grades, like they have in Mexico. And it's hard when you just lose all Venezuela oil. So I think that'll start coming back in a major way. It doesn't make sense to ship it across the Atlantic when you can come to the Gulf Coast
yeah,
in
right there.
a quarter of the time.
But don't they have a bunch of infrastructure problems and electricity and like just to get those to full, like to get at those actual huge reserves there is
Yeah, I mean,
not easy.
free market. They're
You're not buying into that? Yeah.
Well, it's just a free market, right? So, I mean, I had a friend reach out to me and ask, "Hey, can who should I talk to if we wanted to do some drilling in Venezuela?" And this is not
Hmm.
an oil guy, and he's a guy I really respect. Who kind of put it out there. It wasn't a fake call. It wasn't like my Uncle Sam from Detroit. It was he's a very very well off investor who is interested in doing this, and so I'm like, oh, that's interesting. And he's like, yeah, I've already got contacts with the, government. We've done deals down there. We have 2 or 3 people who on boots on the ground already. You know, who's the guy? And I'm like, wow,
Right.
okay. It's like, I don't know, but I can put you in touch with someone who knows a guy, a guy with a guy. So
But the previous part, he was saying like all the majors are owed billions of dollars from when Venezuela like kicked them out or took it over. So yeah,
yeah.
we'll see. But that's interesting. Private enterprise, like, yeah, let me in there.
Yeah. Yeah. Free. Great.
I'm ready.
Yeah. There's not many places like that you could get that kind of money and return on it fast.
Love it. All
Time,
right.
time to
What
buy some
else?
ocean, time to buy some oceanfront property there.
Yeah, I've never been.
Same. Let's go. Chaos on all fronts. I'm curious to see
Constructive.
where we end up with this. I
Give me like a 3 or 5 year outlook. Not, I mean, not in price, but just like peak oil. Is that all dead and done?
I don't believe in peak
Um,
oil ever, so it's okay.
yeah, right.
There's
We
always
just
oil.
learn how to drill better and deeper and sideways. And
I mean, in the United States, every time, you know, I think 10, like when I first left JP Morgan, it was like, oh yeah, like the shale is gonna peak. It can't possibly. And every year, you read the 10Ks and the earnings reports of all these places, and they're like, oh yeah, we increased our efficiency by 30%. And you're like, how's it possible? Like how are you just
yeah, what?
30% better at this year than you were last year? And it just
Hmm.
keeps going, and they just keep getting better and cheaper and better and cheaper. So it just doesn't. Yeah, I'm not sure how that's gonna stop.
Electrification, e-vehicles, e-trucks. You're not worried about all that?
There's no chance that if there's any if there's anything that we just learned, it's that all of these data centers just absolutely nuked every hope against EV that we've ever had. The
Yeah.
grid can't handle the EV power anyways, and if you just add these data centers that they're talking about, it's even more energy that they're going to need. So it's just I'm not seeing it for any.
Yeah, and me, I'm huge. I'm promoting all our old pods here, but we did a uranium pod. I think uranium's a huge answer, but even then, I think you'll have nuclear's powering all those data centers, oil's powering transportation and construction, and
Yeah,
so like it's all hands on deck, right? Like there's no way we're getting the everything's going to need electricity, and that's just going to keep growing and growing. Like
yeah.
who knows?
And you're also seeing it now where it went too far. I forget who it was, but might have been Ford, and they canceled a bunch of their
Yeah,
their EV projects. And I'm curious. I haven't checked on it in a while, but I remember Toyota saying that they're going to have 100% EV by 2050, I think. But I think they've been slowly walking that back. So I'll be
And I
curious.
think a lot of them had real success with hybrids. So I think the hybrid people we're going to switch totally over to match Tesla, and then people were buying hybrids more than
Yeah.
EVs. I know Audi, they're, I think, getting rid of the pure EV and going to hybrid.
I don't know. I live in Wyoming. So if you're like, hey,
yeah,
every 250 miles, you have to stop for an hour. It's like, there's nothing around here,
Yeah, come on, man. How am I supposed to get to the top of Idaho?
Yeah.
But it'll all change, right? They'll be like, no, the new range is 500. So what's the number till you feel comfortable? 1,500?
At least 500.
Like in a range.
At least 500.
Yeah, at least.
Yeah, it's just,
all right, man.
I mean, it's just not worth it to me it takes me a minute and it takes you under 5 minutes to fill your tank with gas, or you have to sit in a parking lot for 50 minutes while it fast charges.
It's faster now. We got 2 in this household in Chicago. It's fast, but even in Chicago, it doesn't matter because it's just charging overnight. And then we drive around 10 miles during the day, if that, and it charges again overnight. And
I would
never need to worry about it.
I would consider, having one car be fully EV, but I think you're always going to need the long distance one.
Yeah. And then ships, planes, it's all coming, but all hands on deck's my answer.
Yep. Cool.
All right. We'll leave it there. So you told me offline you're going to get what, 20 inches of snow tonight?
Yeah, I'll believe when I see it. It's 50 and kind of drizzling right now, so I don't know how it's going to happen, but
all right,
it's okay.
We'll
we had a good winter. I'm ready. I'm ready for golf season and some warm weather, so it's fine.
Awesome. Well, thanks for coming on. Thanks for talking through what's going on, and we'll talk to you soon.
Great. Thanks, Jeff. Appreciate it.
Okay, that's it for the pod. Thanks to Jeff Berger. Thanks to RCM for sponsoring. We'll be back next week with an interesting one, talking to a group that puts out trading contests and uses some software to see which of those guys is best and girls is best at predicting where the markets will go, or predicting where others think the markets will go. Gets a little complex, but should be an interesting one. So we'll see you next week. Peace.
You've been listening to The Derivative. Links from this episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.